What's up, traders? It is January 28th, 2023, 1:42 p.m. I worked the farmer's market this morning and I'm just now getting to the charts. I'm not going to do any deep work here. We're just going to go top-down analysis of Bitcoin, Ethereum, and the markets. I noticed that I'm an ETH short, which I didn't know about. It triggered just now. A breakdown. And I'm in these Bitcoin shorts. We're going to come back to this. I don't really care. I'm just paper trading, and a lot of what I'm paper trading is breakout and breakdown trades where I don't necessarily have that much of an edge, and I'm just kind of trying to learn. Um, so, yeah, the idea is, well, we're going to come back to this. I want to start on higher time frames. This is the beauty of paper trading, is if these were live trades, I would be so zoomed in on them, and then it would make it a little bit harder for me to do this higher time frame analysis. So let's just allow these things to happen for now. Having breakout trades on a weekend is maybe slightly foolish, especially breakdown shorts when we still see the hottest spot of what's gathered over the last year is above us. And we're in a trending up, so I feel like everything's still pointing to 25.6, and I'm not really positioned particularly well for that. 24. So I do want to position myself for what happens if price doesn't pull back and just goes to 26, 25.6, which is not very far away, really. It's only, what is it? I don't even think it's a 10% move from here, from 23 to 25. On the 3 month though, like if we go down to lower time frames, this is where it starts to get a little bit more murky, where we see, yeah, there's heat above us, but we've taken the major liquidity. And the more time we spend at these levels, the more there's major liquidity forming underneath us. Like that is some major liquidity forming on Bybit. Bybit's not the most, but yeah, this is some major liquidity forming underneath us where locally the biggest hotspot is above us, and that's one of the hottest spots, but there's so much below us. And the more time that we consolidate these levels, the more likely that we liquidate all these longs. Like you really want to see us get up to 25 and hold for the bulls here. I mean, either way though, I think it's important to try to hold for these bigger breakouts because to the upside, because even if we pull back and say we sweep under this, oh man, it'd be really interesting if we came back to 17,000. I think it's quite unlikely, but it'd be very interesting. Now on the seven day, the 7 day is clearly pointing to lower in terms of liquidations. That on the 7 day, by far the hottest spot is below us. We took mostly everything above us. There's a couple spots above us, and maybe we get up there, but this is one of the reasons why I'm positioned the way I am with shorts right now is 22,000. It sort of makes sense to it sort of makes sense to go down there. Now, I don't even know if it's worth looking at the 12-hour. I think I'm not even going to. I don't think it gives useful information for the time frames that I trade on. But yeah, after this happened, I became more interested in shorts, which is lower and ultimately down here. That would possibly be a long area too. So we're gonna come back to ETH, which this short is going horribly, or not very well, obviously. Let's go back to the macro, higher time frame. The dollar clearly in broken uptrend and is in a downtrend. And now we're kind of waiting to see how far it will go. If it breaks this trend line, then at that point, maybe we have a reversal of everything else starting to go down. I do want to mention though that what's interesting about the dollar, which does have inverse correlation to crypto, is the top of the dollar was not the bottom of crypto, actually. It was the day that the dollar broke trend line, and the week that the dollar broke trend line was the bottom of the market and was up from there. So that was kind of interesting. Do we see signs of a base forming? No, not necessarily. We're in a steady downtrend, but if these lines get tested, there's several of them. It could become interesting for counter rallies, um, and trend reversal in the other direction. So that's something that I'm going to pay attention to and just check in on every day, probably, or once a week at least. Look, if either of these lines break, then I'll have all the major ones here. These are the major pivots. Let's get them as precise as we can. This one. Yeah, that looks good. So any of these breaking would make things interesting. But I mean, breaking the first couple, we would have to break this one for things to say, hey, actually, maybe the dollar is going to go higher now. Because, I mean, part of what would happen here is figuring out which trend line makes sense and will hold. Because for the whole bullish move up, there was a couple trend lines that might have made sense to study, and it was this one that actually was respected and also signaled the break. Okay, now stock market indices. A lot of people were paying attention to this line. I do think it's important, and taking along like that would have been reasonable. A couple things. First, like just my income is solely from trading. Basically, I quit everything else I'm doing, just focusing on trading for money. My capital stack is my runway and also my income generation. I'm not willing to just throw it into the market and dollar cost average, although I think doing so at these lower levels would have been totally reasonable. I can't take those risks. It's too much of a risk. If I had a job, it would be reasonable. I would have played this way differently if I had a job, I imagine. I would have liked to buy at the lower levels on Bitcoin. I was talking to a friend about it, but it was like, it just doesn't make sense for me to buy spot when I have my only source of income comes from my capital stack. It doesn't make sense to risk like that. What is this one? Well, either way, we broke them. We broke all the key ones on. It doesn't mean that we go instantly up, but it very likely is some kind of a trend confirmation shift. We're not going down as fast as we once were. Although it could be something like this though, where it didn't really do anything for the Russell. Okay, now let's go to crypto, and we're going to start on the higher time frames here. First, I want to look at total 3, which is everything crypto market cap excluding Bitcoin. So I do want to point out that even if this is a significant bottom, like look in 2018 is quite interesting. there was a significant bottom, but the COVID low was actually lower. So it wasn't safe to just buy and hold. You still wanted to take your profit. There was from June 19 to December 19, it was like 6 months of straight down almost with one rally. We had a big rally and a big dump. So these are trading rallies. To me, this is a trading rally. I don't see us going immediately back to all-time highs. We might have a really nice 6 months rally. It's possible. We might have a 6 month dump and go to a new low. We might have another rally and another dump, and we might never hit new all-time highs. We might, I don't know what's going to happen. And since I don't know, that's why I'm managing the risk the way that I am. Now, from the chart, I haven't seen anything from the total 3 market cap that is particularly bullish. If we correlate it to other risk assets and the DXY, then it's good. We took this down close candle, the red candle here, but in terms of market structure on a higher time frame, we have still put in a lower low and we haven't yet put in a higher high. So I don't see a reason to be too excited. I think this trend line is maybe important. We can look at a couple of the other ones. That was possibly a breakout, important breakout point. Let's clean these up. I'm curious. Yeah, so we're actually at a resistance point, coming up to a resistance point, but an area where if we do break out, then possibly we could take this one, but there's, to me, just from the candlestick, there's signs of weakness here coming in, even though we're in an uptrend and we're making higher lows on the daily, because if you look, a lot of the wicks are to the upside, and we will wick higher but fall under. So this is a strong trend. This is following a strong trend, a sign of slowing trend. It's just something to keep in mind that, hey, this is a key pivot point here where we might just reject there, or we might take it and reject, or we might blast through here and we put in a higher high, and then we could say this might look kind of bullish, but there's so many insane rallies and dumps even in this with what happened here. So let's go look at a couple of these rallies here. We can see we had this trend line, and if we use this as a trend line, there was a couple little fake outs here. Once it kind of broke for real, and this is why it's good to have a couple trend lines. We did have a pretty significant rally, but all we ended up doing was making a lower low. Sorry, a lower high. Although there's a lot of money to be made in this period. From December to June was about a 6 month rally of a tripling of the market from 30 billion to 100 billion. So there's definitely money to be made there. But there was even money to be made on the short side, as there was a big down move here, a big down move here, and then several down moves. But again, I don't mind not being a spot buyer here if this is a parallel where we're here and there's a good chance we come back to these prices based on past history. That doesn't have to repeat, but might. Just quick on Tether. I haven't looked in a while. Tether is doing fine. That's good. It's actually at a premium. Bitcoin has been pretty close for a long time now. I'm interested in seeing which way it breaks, if it does break. You can see on the weekly, it's had 3 red weeks, but since we're just chopping in a range, my bet is for mean reversion if we get down here to come back in. The trend is ranging, and you always bet on the trend continuing, at least on a higher time frame, until you have an idea that it won't. Bitcoin dominance is consolidating after a pretty big push. I'm interested to see what happens. I'm interested to see if this narrative repeats where Bitcoin pumps, then ETH pumps, then altcoins pump. And this is just like smart crypto money that understands that when there's not new money entering, you just rotate your capital. You take your profits off Bitcoin, you pump ETH. You take your profits off ETH, you pump low cap alts. You take your profits off alts, you short the market or you sit on the sidelines because new money didn't come in. And yeah, that's something to pay attention to. Positioning yourself for the long term here is probably fine, but it's not what I want to do. So let's look at higher time frame. Bitcoin and Ethereum. I want to turn off my indicators right now. And take all this out. Okay, so if we look at the weekly on Bitcoin, we're clearly in an uptrend. I am just noticing that we had a huge body, another quite a large body but smaller, and now we have a small body with a big wick or bigger wick, and the weekly closes tomorrow. And our weekly candle body is closing within last week's wick high, which is not necessarily great. But again, this was right here, it was like that, and then we ended up continuing to trend for quite some time. So it's we're in an uptrend. There's a possible sign of weakness. I mean, you look at, say, this uptrend, and yeah, I mean, there were a couple of weeks that were maybe looked weak, but we just kept pushing higher. But then when we saw some weakness, we didn't necessarily pull back, but we stalled for a long period of time. Then again, when we saw some weakness, actually we did get a pullback, stalled. Once we started this uptrend, for the most part, we closed at the highs of a candle, the previous week's candle, or above most of the time. There's a couple weeks pullback there. And this was near the top. There was 3 big weeks, and then we didn't really get higher than, we got slightly higher than there. Although I think a rally like this off the bottom is probably slightly more likely, where we're not probably not going to all-time highs, and we can have a significant retracement later on, where we poke back into the lows, which I would say maybe at some point we come back to 17,000, and liquidate everyone who went long there, which is a lot of people. But we might go extremely high first and just have some macro event that's super bad and there's a big sell-off. But you can see this looked like there was maybe weakness coming in, where we had a big week and then traded sideways, and then we just went straight up for another 2 months. But then once we saw weakness up there, that was real weakness, and that was the top of that rally, and we retraced considerably from there. We went down 70% from there. So I'm not a long only guy. I'm not a short only guy. It's just something to pay attention to, where we have the new daily just started. If we look on the daily of where we are now, slowly working my way down to the low time frame. We took this high, we're consolidating above it, which is actually good for longs. This is the next intermediary target. After that, I don't know that we have a couple. This target and this target are the main ones for this year. We might make it to 32. There's a chance we make it to 48, but price is likely to try to push up there. I think it's very unlikely we come back and take the lows. This is a significant market structure shift, and with the trend lines being broken, it's always possible though, and always something that I want to consider. Now on the daily though, we're continually pushing higher, but we're starting to compress, and the more time we spend in here, the greater the chance that longs will be punished with the sweep of one of these consolidation levels. It doesn't mean the start of a new downtrend, but just a liquidity event, either in here, or both. And so I think it makes sense to be sort of neutral where we are now, to mildly bearish, in my opinion. However, it makes sense to not have significant downside targets. I don't think there's a reason to aim under 20,000. I think it's very unlikely we go back to this 16,000 area, but it's possible, but very unlikely. And longing in either of these areas are fine, and longing a breakout might even be reasonable too. ETH is similar, but has shown more relative weakness. And ETH does have one important trend line still above us, which is here. So it would be quite interesting if we were to reject here and come up like this, where we have this trend line as a possible long, and then if this ends up being a top here, then a breakout of it could become quite interesting later if price wants to like do something like this. So that's something to pay attention to. Now ETH is showing a lot more relative weakness than Bitcoin, where Bitcoin took this on its chart, the second high, and stayed above it. ETH just barely nicked this and then is sitting under it, which increases the odds of this just being a liquidity grab before another move to the downside. That said, I still expect a higher low. Like this low was only created because of the FTX thing. Otherwise, if there's no insane macro reason for price to come down here, I would expect a higher low if we dump. I'm not saying that we for sure dump. We also might just sweep this level and then start aiming for some of these other highs. As far as longer term targets to the upside, there's this level and then this level. This is a double high, so that's quite interesting on ETH as potential targets for the year. But similar to Bitcoin, something to pay attention to is the end of the bear market did not signal the start of the bull market. Or at least we had a bull market, but it didn't necessarily last that long. So, I mean, if you look back and we see coming out of this bottom, we had an amazing rally. Once again, a 300% rally. There's a lot of money to be made there. Yes, but we came back to these prices later on. So if you're leveraged long and needed to not ever be underwater, then it didn't work for you. And even if you're spot long, you don't really want to be underwater. It makes sense to close at the highs, wait, and then take some other trades. And it doesn't have to repeat how it is, but I do like looking at these fractals as being particularly useful and insightful. And the time between a bear market and a bull market, it may be a period of ranging because trend doesn't necessarily reverse immediately, especially when you consider that what the Fed is intending to do here is to have rates high for long. So high long rates doesn't mean new bull market. It does mean easing of financial pressures, but I think it would set us up for a market that has a wider swinging ranges, which we saw here. So now I want to work my way down onto lower time frames. And let's start off by looking at the positions that we're in, which are, I don't know if they still make sense necessarily. I have all kinds of shorts. So again, part of what I'm trying to do here is I'm trying to find anything that I think has an edge and take many trades. And then I'm trying to, um, um, yeah, just get used so that I can compound more, and that so individual losses and mistakes matter less, so I can have more consistent income. Um, it makes sense. And one of the ways I'm trying to do this is I'm trying to practice low time frame breakdown and breakout trades. I don't know that this strategy or system makes sense. I'm just kind of learning. I'm not too stressed or worried about it right now. But also by trying to taking all these trades, I'm trying to just make myself totally immune and numb to being in trades and holding positions all the time. So I did fill in this long. I didn't that short. I didn't fill in this short. Um, this one, it looks like I brought this one to break even already, roughly. Negative. Wait, hang on. Where did I enter on this one? Should have been right here. Um, let's take a look at this one. Sell here. Oh, the stop for that one is here. The stop for this one is here. Oh, that's my entrance. Where's my stop for this one? This one is in profit. I think that there's a problem with the way that Bitcoin uh, combined entries work, because I think it wants to close my entire position right here when, yeah, let's take a look. I will say this has not really been working that well for me, but again, what's working well for me is learning about where the edge might be in breakdown and breakout trades. Sell 2 here and sell 7 here, yeah, and it wants me to close all of them here. I don't really like how that works. I don't want to cancel my stop also, but it keeps advancing my stop to the furthest stop, which I don't like, but I don't know how to make it not do that. Turn off executions. And by the way, we studied this, but I think the edge in these quick breakout trades is getting in and out quickly. Okay, let's close this one. So this one, yeah, this is the problem, is it has me as having one position when I want to have two positions. So I want to create a stop loss. Ticks price. Yeah, there's no way around this, I guess. What is my average price? 231,133.9. 23. I mean, I guess I'm gonna put it where this is, but that's not accurate. And that's a problem with TradingView. 23171. And then I wonder if it's doing the same with my take profit, where it's gonna exit me out. Yeah. It just doesn't really work very well for multiple positions, where it wants to take me out of the whole trade right here when I want to hold. This is more of a swing position. Yeah, I'm just realizing how sort of bad this works. It doesn't really work very well. Maybe I need to try Lucky Chart Apes, um, his thing. Okay, well, let's assume that I actually can trade like this, but now it's, yeah, I just don't like how this is set up at all. And this explains why certain things have happened which have not been to my advantage when I'm stopped out of positions that I like, because it's kind of hard to do partials with this. Okay, does it even make sense to be in a breakdown along here? Not really. Like when we broke down here, something like this, and we broke this trend line. It worked initially, but we came back in. Although, I mean, this is what I like, is seeing a diagonal up and a flat level ahead. Because if we take this level and we start taking these, then it makes sense to come down here. So I don't necessarily love how it started, but I'm going to allow it to play out. I have a breakdown here. If we take this low, then we come down to here. These are just ideas. If we retrace here, I have an inside short from this day. And then I also have this short up here, which I don't necessarily like as much, but I'm going to leave for now. Still just trading this range and thing. At some point, if like we have a big candle, it will be to my benefit. So let's look at this ETH short, which I really don't like. I kind of want the longs. Um, yeah, I mean, we are in a small downtrend, so that's nice that if we don't break this trend line, it will move in my favor, but definitely looks like more liquidity to the upside, and we could have a big move up. And I kind of want to position myself more for that. We did break some kind of major trend line here that we bounced on this. That was the idea for this short, by the way. We bounced on this trend line once, twice, 3 times, 4 times, 5 times, and then we lost it. However, it would have been a lot better to enter right where we lost it, but this is something I set overnight. Yeah, the odds of this trade working are maybe not particularly good, but I'm also gonna just leave this and think and learn. And we are at least in a local downtrend, coming down from the highs of the range. I don't know that it's particularly likely, but there's possibility that we come down here. But yeah, this trade sucks, and I expect to be stopped out of it. But we're so close to our stop that um, I think the RR of keeping it open is a lot better than closing it. Now let's look at longs here. I'm gonna look at ETH longs. ETH longs are a lot more interesting to me because there is an equal high, there's a higher term. Like, I'm quite interested in some possible breakouts. I'm going to try not trading my poke into gap trades. The reason being that they're quite correlated with I think they're quite correlated with the inside retracement trade, which I think is just a lot better. So what I mean is, if I'm trying to like, this is such a big area to guess we're going to reverse. I would rather see strength and then enter on a retracement, and that would have saved me from getting slaughtered in the rally, where If I was trying to trade inside retracements, there weren't many opportunities where it would have made sense to do so, and I would not have taken nearly as many losses, but I kept trying to guess where a top might be. And the inside retracement is asking for weakness or strength to come in first, and not trying to guess that where and when a bottom will occur. So I'm going to get away from this. I'm trying to guess that it will occur, that it has occurred, right? So lower time frame, I do have a short idea here inside of this, with the idea being that, okay, we do have one trend line here, and we have a trend line here. Need to pay attention to those. There aren't really significant and important trend lines above us, which is another reason it makes sense to be a little bit more cautious, if not bearish here. We could say, so to me, this trend line probably doesn't have enough touches and enough liquidity to want to break out long here. There's no high time frame breakout longs. ETH is much more interesting for a breakout long, and something I am interested in doing. Because we have 1, 2, 3, 4, 5, 6, 7, 8 untouched highs in a row. The odds of a liquidation cascade happening are reasonable, and it being so forceful, there's a chance we break the next level. So I'm interested in trying a number of them. I'm less interested in longing in this area because not only is there no fair value gap to enter here, but yeah, I would just be more interested in seeing. I'm more interested in inside trades anyways, right? Like if we have some inside strength come in, I can trade on the inside of this. But let me just wait for that. I think that that's a good way to just reduce losing trades. Yeah, like the short should have been. We're gonna come back to the ETH longs. I set the short at this key level here. And the problem is I set it last night around this time. I didn't know when it would break. But I mean, in retrospect, and this is why maybe market ordering would be more reasonable. Getting an entrance like this and a break at the trend line would have been better, but that's something for me to pay attention to is like if this major trend line is up here, why is my entrance way below it? Like when I entered like many hours after this trend line was broken. So yeah, it doesn't make sense and it's not working particularly well, but I'm gonna leave it and I will take a loss because technically my trade looks like this now and the risk reward is 8-1. So even if the odds aren't particularly good, I'm gonna let it run. Okay, back to the ETH longs. I'm very interested in ETH longs. Even though it's shown relative weakness from a liquidity perspective, it looks great. From a mean reversion perspective, ETH BTC, it looks great. From a narrative rotation of Bitcoin and ETH, it looks great. So again, I'm not going to do these random poke the gap, try to guess where this is going to reverse. Just look for reversal in these areas. But I can set limits on different breakouts. So the first one would be let's say this level right here and saying, hey, if we take this, I kind of want a pyramid and have a couple. If we take this, we should have a breakout. Let's look at the weekly. Maybe we set another one at the weekly high, which is right up here at 1649. Yeah, that short is ass bad. 1649, this one. That one's the weekly high. That, okay. I kind of like trying a number of them. Saying if we take this one, 1642, now people pay attention to the weekly high, so maybe 1649. We could go up here, I could double my position. Stop loss to allow for some volatility. Maybe we get stopped out. Maybe we don't. So 2 tranches. Just an idea, but, and again, paper trading has been fucking me up where, like, if price does this, it will stop out this position even though I do not want to, because it's not allowing me to have partial TPs. I have an all or nothing stop loss for all my longs and all of my shorts. So I don't really like that. So I have a couple, yeah. I have an inside long on Bitcoin, which coincides with some fair value gaps. And yeah, I'm not gonna have resting limit orders on the outside anymore. I will always miss the pivot, but I will avoid just getting run over and stopped out over and over, which I think is more important. Okay, so that's it for now. I'm positioned. If we go down to the lows of the range, then my Bitcoin and ETH shorts will do quite well. If we chop around, then I might lose some more money. And if we go straight to the, yeah, I kind of hate that. I kind of want to extend this now, knowing that, like, if this is my stop, if it's going to force me to stop this one out, then I want to get more from the first one. The idea, hey, like an inside short isn't unlikely. So if I grabbed 5 from that, that would be great. I would be happy with it. Again, I really expect this one to be stopped out. I think it's, I don't know why I had such a shit entry. Just didn't really think. Yeah, I shouldn't have been at this level. It should have been somewhere higher on the diagonal. And that could have worked without getting stopped out. But it is what it is. Okay. Much love and talk to you guys soon. Peace.